Today, ladies and gentlemen, we're breaking down the $127,588 dividend portfolio. On top of that, 2 new stocks that I purchased, baby. We got 2 stocks coming in that increased my dividends to $5,406, which is $450 a month even. And I know it used to be higher than that, but I did some repositioning and I bought some more Tesla, which is something that I want to talk about today. Not that I bought more Tesla today. I bought some earlier, but I made a video on it yesterday and I want to talk about it today if that all makes sense. So let's jump. Who ran into this? Welcome back, my passive income investors alike. Before we head on over to my 6-figure dividend stock portfolio with the new positions I purchased, which we're going to analyze, I want to talk about some of the broader markets and the controversy that I caused yesterday, because I love trolling around. That's why I hang out on Stock Twits, and I made a video on Tesla. And anytime I gave a really big bull case and why I like Tesla and why I, buying shares in it, usually there's the flip side of the coin, and I always cause a lot of friction in that comment section. So let's scroll down and read some of the more enlightening comments from this video, ladies and gentlemen. So the mighty Herrera was one of my favorites. He says, garbage company, no moat, no dividends, lying CEO. When Audi, BMW, Mercedes go electric, who would want a Tesla? There's the problem. I disagree, but love the comment, man. Keep them coming, keep them coming. Ken Richards probably made a what I would think is one of the more intellectual comments so far here. He says, I like your videos, but Tesla is fundamentally an automation play at this stage in the game, and if that's something you want to bet on, GM's automation division rivals Tesla's, but doesn't come with such a scary chart, and pays a healthy 4.5% dividend, which is something I'd expect you to be all over. If potential automation plays are making it into your portfolio, I'd encourage anyone buying Tesla to consider hedging out their automation risk by including a handful of positions in some other established competitors. And I do agree with that statement 100%. If you're looking to basically build a nice diversified big portfolio and you've kind of got the money and it's what you want to do, I mean, go for it. But for me personally, I like picking little bits of companies everywhere, and Tesla isn't a company that I just pick because it's a car company. I don't like car companies personally, and I consider Tesla almost as more of this basket of companies. It's like an energy play, it's like an automaker play, it's like an automation or AI play. Like, there's so many different variables that come with owning Tesla stock, and I almost consider it a similar company to like my Northland Power stock, which we'll take a look at in a second, which is a natural energy company. But I like picking a small handful of companies, and if I was going to pick one car company right now, the way I want to pick it would be Tesla. So completely agree, though. I think this is a really healthy conversation that we're starting here, guys, and I really, really appreciate it. Here's a funny one from Ghost. The last chance Tesla stock, the other half knows you're talking to FOMO, fear of missing out, essentially. You're what is bad with the world. Oh my goodness. Am I really the worst thing with the world? I mean, I boasted about you should buy Tesla. It's a great time to buy it. Made a little bit of a clickbait title by now's your last chance to buy it. But I mean, since I made that video yesterday, Tesla's up another $10 a share, and I had no problem buying it, a couple days ago. But I'm not going to go up too much because this is short-term volatility, and I'm just using it to troll back. So anyways, let's take a look at the broader markets, guys, before we head on over to the portfolio itself. And stocks continue to be somewhat mid-flat. Luckily, there's a few in my portfolio that are crushing it, but we'll take a look at these in a sec, as these top holdings are mine all the way down to BNS. But taking a look here, guys, I recently sold MMM and Starbucks to buy J&J, which seemed to be the better position in the short term, but I did that to further concentrate my portfolio. I got to give a big high five to one of you beautiful subscribers, because one of you recommended TNT a little while ago, which is a Canadian REIT, pays out 8% dividend yield, and it has been on a tear lately. I did not buy it, but I did do a bit of a dive into it, looked at the properties, incredible tenants. We're talking like federal government like tenants, AAA tenants, great properties. Wish I bought it, chose RioCan instead, which we'll take a look at as well. But more importantly, the market that I found most interesting is all in the red today, but was super green the last few days, and that was the MJ sector. And I pay close attention to this because if you own any of the companies like MO, Altria Group, or Constellation Brands, you have exposure to this sector in the market. Now, honestly, is the biggest tip I think I could give anybody: don't own these companies individually, because you're going to experience this extreme volatility. The way you want to own these companies is by owning Altria Group or Constellation Brands, because these companies won't experience a downside nearly as significant and they get all the upside. So if you want a dividend and you want to see that dividend grow and get capital growth and you want that exposure to that MJ market, the best way to do it, guys. But I mean, it's just been an interesting thing to watch because, you know, the government's introducing edibles now and we're going to get 1,000+ stores opening up, guys, just across Ontario alone. I think it's going to be a very interesting market coming 2020. So moving on, guys, I think we're just going to head over to the portfolio because I'm not going to touch base on Bitcoin. If I really want to stir the pot and get that comment section heated up, I would really start kind of trolling around in here. But I'm sure you guys get enough of the idea. So moving on. Let's take a look at the actual portfolio in and of itself, starting with the tax-free savings account and what I recently bought. I took some of them juicy dripping dividends and I bought some more GEO Group, which luckily I bought it just before the pop yesterday. That's not GEO Group, that's British American. GEO Group. Yes, that's right, ladies and gentlemen, my worst performing stock. The one that I said I'm going to be really hesitant on because there's going to be obviously some friction going into the future here. But we're starting to see a big bull case coming back for this guy. I managed to pick up shares yesterday when they were paying out like 14%. Because as we can see, guys, there's been some big boats coming in and picking up some big chunks of shares. This company is extremely volatile due to political headwinds. I figured, you know what, I always have a back and forth devil and angel on my shoulders because every stock that I buy, I try and buy with some strategic understanding of going into it. And I never like to just sell a company. And when we take a look at the balance sheet here, guys, we're talking about a company that's only paying about 0.7 times its earnings. So, I mean, when we take the $1.92 dividend and the earnings per share is 2.74, we can see that it can, actually afford to pay this dividend. If we go further into its books, you guys can break this down farther. I personally like this company, and it's why I can't help myself but buy more of it. But these were just the sectors that I decided to focus on this year. I really wanted to focus kind of on the drug sector, so my MO, my BTI, my GEO Group, my Johnson & Johnson. Those were like my big companies I wanted to build this year, and I'm not quite finished building GEO Group. So you know what, I figured let's just, finalize the position. Let's build it up to about a $6,000-$7,000 position of my own personal contributed money because, I got a cost average in, and we'll try and get my average cost below $20. And then let this thing ride and collect the dividend that it can definitely afford for the next few years nonetheless. And I think it'll be able to do it for the rest of my life, to be honest. But nonetheless, guys, moving into the next position that I decided to purchase, which is one that I haven't, I talked about a little bit already, but that was obviously MO Group, guys. In my Royal Bank, I decided to interject about $1,000 that was just sitting around. And I decided to buy some MO. I wish I got it under 50, but we're not doing too bad where it sits right now. Pretty happy with my overall MO position, as obviously I own a lot more of it in my managed account as well. My full position into this is way beyond scale. I don't recommend over leveraging a portfolio this way, no matter what. I just really believe in this company, and I am actually going to be selling off the rest of MO in my managed account before the end of the month. As the month comes into the end here, guys, I'm going to take 6,000 of this and I'm going to dump it into my TFSA, my TFSA, because as many of you know, you can only contribute so much money to a TFSA every year, and usually that's around $6,000 here in Canada. So I'm going to dump 6K in here, pay the tax on it, and basically buy back, a little more MO, a little more BTI, and a little more GEO, and a little more RioCan, and I'm just going to further diversify my entire portfolio that way. And then I'll be pretty happy with these positions overall. I'm very happy with where these portfolios currently sit. And then what I might do is take a couple thousand and put it into my RRSP, and then maybe keep 1,000 in this account floating around for some taxes. I'll probably use a bit of this money to pay off my tax, but so I went over in my last video, I'm not going to be paying a whole lot in taxes as it is, and that's just because I contributed $20,000 to my RSP this year, which knocks about $10,000, $8,000 to $10,000 off my taxes this year, which is pretty substantial. Let's be real, guys. But if we come in here, absolutely wonderful performance. These are all brand new positions. I have not started utilizing my RSP until of recent, like within the last, 4 or 5 months. And within the last 4 or 5 months, we're seeing some really healthy gains already. We're seeing about a 4.5% on my US holdings, and my index fund has already paid out 3.47%, just in the capital gains. They're obviously not paid out, but we're collecting dividends on top of this, guys. So, I mean, absolutely beautiful growth on this end of it. I wouldn't mind owning a little more J&J and Tesla in here. Might consider buying them with those MO position in my managed account. Might transfer that over. But yeah, it'll be fun to see where all of this ends up. I'd love to know what you guys think in the comment section below. Lots of interesting things going on in the market today. If you enjoyed this video, consider slapping a like and subscribing, because all of you make this possible. And I also want to hear your juicy knowledge drops in that comment section below, ladies and gentlemen, as I come up with my weird suggestive words. But stay cool, stay awesome, guys. I look forward to chatting to you real soon.